Good morning, gentlemen. Grateful to have you here today to talk on an ongoing series that we like to facilitate with, experts in the industry, and grateful for both of you to be here today. I will just go ahead and introduce Jeff Cormell as Bank of America, 20-year veteran, Vice President of Healthcare Lending for Practice Solutions. Jeff, I know you've been in the industry a long time. Really grateful to have you here today.
Thank you.
Thad Miller of DDSmatch, runs a fantastic brokerage that serves pretty much the entire U.S. today, and does a great job just facilitating transactions of sellers and connecting them to buyers.
Good to be here. Thanks for having us.
Thank you, Thad.
Yeah.
Well, guys, today I think we're going to talk about a couple of different things, but really I think it's going to be grounded in trying to determine and trying to help people understand whether or not they should do a ground up de novo or stick built, a startup, right? Or if they should be, kind of thinking about an acquisition of a practice. So let's start with that. Jeff, maybe you kick us off and just start maybe talking about that startup philosophy.
Yeah, I think when it comes to the decision-making process for a new business owner, there's a lot of factors that they have to consider. Where do they want to purchase or start their first practice? What type of practice do they want to have? The patient base, the procedures, all of those things kind of play into the fact of where would be the ideal location. So obviously if there's a practice that's available that suits your needs, that's an opportunity. If there isn't something available and you've vetted out all of the processes and you've now gotten to the point where doing a de novo startup is the most viable option, I think from the, at least from the healthcare lending space, the opportunities are there to do both. So it really comes down to, I think, personal preference and what's available at the marketplace at that particular time.
It's great. And I guess before we jump over to that and talk about the acquisition side, I guess I have a quick follow-up question that's a little bit more touchy-feely.
Sure.
And help me understand, I know you've worked with a lot of, and Bank of America works with a lot of startup individuals in multiple industries, but especially in the dental world. Help me understand and help the listeners understand, what is the gumption, what are the personality traits, what are the folks that you see that really do this well and I guess where it's
Sure.
an exciting
it's a good
thing
question.
instead of a hard
thing.
thing.
I mean, I think obviously an entrepreneurial mindset, somebody that has a vision with respect to the type of practice they want to build from day one. It's somebody that has maybe vetted both sides, again, as I mentioned earlier, that they've looked at both, but really has a specific desire to start up in a certain area. They're typically, licensed for 1 to 5 years. They've got some experience in one or multiple practices where they've got to see a few different viewpoints on how practices are operated and how they want to build it themselves. But first and foremost, I think the one thing that they do, and I would recommend with everybody, regardless of which way you're going, is build that professional team around yourself first. Because having a network of accountants and attorney and a bank and marketing, and there's 15 to 20 different people that person would put around them, just to get the business side of things going. And obviously they're going to deal with the contractor and distributor and designer, to get that practice going. But building that team is key. And once they do that, they really start to take the vision of what they want to build as a collective and start to put it in motion after they've found their location. I didn't mention in there's real estate that people will even help them find that ideal location to start. But once they get that, those wheels moving in that direction, that vision really starts to come to life for them and starts to progress down the track of being able to open the practice. But that person is definitely somebody that has vetted out the options, has seen what they've liked in the practice side of things, and then really has their own vision to kind of push that forward.
That's awesome, Jeff. I appreciate that. That's very helpful to help people get in the mindset of thinking down that path.
Yeah, and one thing I guess I should mention too is that when people come to us and say, hey, can I do a first practice purchase or can I do a startup? Those doctors typically, from a financial standpoint, look fairly similar from a financial standpoint. So they've typically got student loan debt. They've typically have a mortgage. They may have some credit card debt and own a home. So these are certainly not people on either side of the fence that are debt free. They typically, if you're looking at things, they probably have a negative net worth. They've got cash saved up personally, some investments, but they also, most of them still have some debt from dental school and potentially a house. So from an economic standpoint, they're probably right along the same path. It really comes down to desire and opportunity that's available for them, depending on which way they go.
And Thad, I think that, talking about the acquisition side, sometimes what causes startups is a lack of acquisition targets in a specific geography. But, a lot of people probably start there and maybe end there, right? So let's talk about, that acquisition journey. Just let's help orient the audience to kind of understanding what that would look like, how that would feel, from a buyer perspective.
Sure. And in a transaction, or a transition as we like to play in a DDSmatch, I think it's important when you're meeting with a potential dentist you're going to acquire their staff and their patients, is to really focus on connecting with the dentist, taking the time to not look at it as a brick and mortar type situation, but really connect with the goodwill as part of the document state that they're buying. It's very important to take the time to get to know the dentist, maybe their spouse. Take your spouse along. A lot of times our spouses are more intuitive than we are. And I encourage that, and we encourage that at DDSmatch, is to take time in the process, because it's not just a transaction, it's a transition. And I think that when that happens, you obviously get a lot at the beginning because you have cash flow when you buy a practice. So you have a history. You have patients don't want to move. They like the staff. I mean, one person is changing in usually a staff of, 5 to 20. So still, majority of the people are still there. And I think the most important advice I give people when they're acquiring a practice is don't change much at first. They're already going through a lot of change. But if you can slowly bring in the change, that cash flow will continue to grow. And we don't see a lot of dramatic changes of staff or patients or whatever it may be, because obviously those patients have connections to the staff in addition to the dentist.
I love what you said about the emotional intelligence kind of quotient of an acquisition. I think it's really undersold out there. And a lot of times when I'm working with clients too, I'm just trying to educate them on, guys, we are transitioning a relationship. Here we're starting up relationships. We're building anew. We're starting relationships from the ground up, literally. And then here we're transferring relationships, which sometimes is even harder, right? And that emotional intelligence is key, right, as they kind of go down that journey and think through that. So from an acquisition perspective, I think a question we often get is, what does that journey look like? How long does it take if you find that right person and that right transaction, those right relationships to transfer?
Well, I think if they're committed that this is going to happen, the actual transaction takes 30 to 60 days, depending on what it is. But I always like to keep this dentist who's sold there for a period of time, maybe not as long as maybe they think, maybe not a year, but maybe more like, 2 months to 6 months, okay? And maybe it doesn't have to be full time. It can just be around to ease the transition, ease the staff. And the more they know each other in the process of before they sell, the more the seller can sell the buyer to the staff, after it's over, and to the patients when they come in the room and say, I've got to know, Dr. Jones and their family, and I trust their care with you, patient. So I think if that connection's there and it's genuine, it's usually very smooth. And it's a bit, as I say, it's a bit of a dance after closing of introducing patients, introducing staff, acclimating to the new experience. Nobody likes change, right? We're in the change business, but change is constant. Change happens every day, and we just have to embrace it. And the fact that the seller took the steps to find the right person, the right match in this case, it helps play out for the future for the patients, the staff, and the community they serve.
I think that kind of leads us well into kind of the next place that I think we should go is, and let's talk about, some of those positives of a transaction and some of those negative things
Sure.
that are kind of difficult to kind of dance, like you said, as part of that deal.
Yeah, I think the biggest challenge is obviously it's always change happens quick in this situation. And in the dental world, dentists, hygienists, staff, they're used to a pretty rigid schedule. They've got an 8 o'clock patient, they got an 8:30, they got a 9:15, all the day. So to throw something new in there, it's a big change, right? In a startup, you're going to grow, your patient base accordingly, and you got to figure it out along the way, and you got to catch up with the investment you made, obviously. Whereas in an acquisition, you should have money coming in out of the gate. But you obviously have to maintain it and ideally grow it. And I think it's important, with the challenges, is to be patient with the people that are there and also be cognizant that you might have to make some changes. And you probably need to advertise. There's opportunities right out of the gate just to have a bullpen in case, a hygienist says, I don't like the way you do hygiene checks and I'm leaving. So I think it's one of those things is you're going to get thrust into a business, but it's a business that's obviously generating income. You're buying a business. You're not buying a house. A house doesn't generate income for you. A boat doesn't generate income for you. You're buying a business that's operating. You're just trying to keep the machine going. And I think patience is critical in both situations. Obviously, patience if you're starting from scratch. Patience if you're acquiring and you're trying to acclimate to the new environment.
So let's talk as DDSmatch and Bank of America. Let's zoom out and let's try to put ourselves in the shoes of a person that's a couple years out of school, a dentist, whether they're specialty or general dentistry. What steps do they need to start thinking about to prepare intentionally, maybe at day zero after graduation, or the couple years in after they've gotten their hands beat up and they've gotten some of their clinical comfort zone, I guess is what I would call it. Jeff, let's start with you,
Yeah,
please.
I think from right out of school and even during school, the one thing that I see is that there's not a lot of business acumen taught. I think that's well known. And I think the thing that the doctors can do if they have the desire to be a business owner is start to accumulate some of that knowledge as early as they can. Some of it's going to be trial by fire because you're going to see it as you associate in a practice for that 1 to 5 years that you're going to do that. Some of it's going to be through continuing education. Some of it's going to be through building that team that I talked about earlier. But getting as much business education as you can, understanding what a tax return looks like, understanding the benefits of your personal financial statement, how the pros and cons of that would work, understanding when you get into the business, as Thad talked about earlier, there's going to be many hats that you wear getting into that. Besides a clinician, you're going to have a lot of other hats that you're going to wear. There's going to be HR, there's going to be financial, there's going to be marketing. Getting as much of that understanding as you can before you're ready to become an owner is, I think, very valuable. From a point of becoming the licensed doctor and now working, the things that I would tell you that we see that help the doctor the most is understanding that financial situation, that you may, again, have that negative net worth, but also start to try to build a cash nest egg for yourself. Because the more cash you have, the more opportunities you have. And that can be in investments, money markets, checking savings, all of those things. That, from a financial standpoint, gives you options. And then starting to, again, network with the team of professionals to try to find out where you want to go and what you want to do is key. And to kind of piggyback on what Thad said earlier, is once you're getting into that transition of goodwill to that practice owner, having that business acumen and having that financial background kind of takes a few pieces of stress off of your plate. Because the hope is, if you set it up, your team and your financial situation the right way, that stress can be set on the side, and understand that your total focus is on running that practice and managing that team and transitioning that goodwill properly. That's what we at Bank of America, with our knowledge and experience, try to assist everybody involved with. Is if they come to us and they don't have a team yet, we try to get them connected. If they already have a team, then we're heavily connecting with that team to make sure we're being a positive part of that network in that process. And I think that's important, from the financial side of things, getting everything kind of prepared and ready once you find the practice to eventually purchase.
Yeah, I love what you said. Is learn the systems, right? Develop your mindset of what your vision for your practice is, and a lot of that will be through, if they start out at a DSO and get their hand speed up, right, for a couple of years. A lot of times you can glean really great systems and processes and what they like and what they don't like and what they want to change and what they want to institute. And then, like you said, so you said build the team. Would you expound, like, what does that look like very specifically on who they should have?
From an acquisition standpoint, when that doctor is looking to buy their first practice, they'll come to us. I would say it doesn't lean one way or the other, but there's times they'll come to us and they have just started looking. They'll do what we hear the most, they'll start doing their online searches to see what's available. And then they'll give a bank a call about potentially getting approved for it or pre-qualified. That is the pre-qualification process, I would tell you, is enlightening for the doctor to talk to a healthcare banker to say, hey, listen, how do I look today? If I found a practice, could I even afford it? And what would work for me? So I think doing that up front, maybe even before you've identified something, is important. I have doctors that have called that are 12 to 18 months out, and they just want to see how they look today, and is there anything they need to do over the next 12 to 18 months to be prepared? That is a fantastic idea to do. Some of the doctors will come into us and they're ready to go. Something's happened in their professional life or personal life, and it's like, hey, now's the time I'm going to move. I'm going to make my decision to buy a practice. They'll come to us. We'll have that conversation. Half of them will have already identified a practice, half probably won't, and we'll start to build the team. And it's, hey, where do you want to go, right? What market do you want to go in? I want to buy a practice and I want to go in this market. Well, then obviously our first opportunity is to connect them with those that have practices available. An accountant obviously is probably the next step to review the numbers with the doctor to make sure that those work.
With dental experience.
With dental experience, absolutely. Yes, we could have a whole conversation on that piece of things. And then also an attorney with dental experience in that case to help do that transition. But those are the people in the very early stages, somebody approving the opportunity, a dental accountant and a dental attorney really looking at that transaction to make sure that it's something that would work for all parties involved. And then, as I'd mentioned earlier, as you progress down that line of getting ready to buy, you're going to be analyzing the marketing. You're going to be analyzing the HR services. You're going to be analyzing insurances, reimbursements, and fee schedules, and those types of things. And there's people in about 25, 30 different areas of that business that could probably help with those things, which is the unique part of dentistry, is that there's a lot of specialists doing a lot of different things for doctors. And at our bank, we finance other medical professionals, and there's just not that type of dedicated and specific help in those markets. So from the dental side, very fortunate to have a lot of help in those areas. You just have to figure out, when you find that practice, which pieces of the puzzle do you need help with along the way.
Anything to add there?
No, I think the dentals, it's more ideal to work with an accountant who has 100 dental clients, that they know exactly what a P&L should look like for a dentist office. the high performers or the medium performers or the low performers. How do they grow? And they have experience that they can share in that niche. And same thing with attorneys. I think it's critical to understand that this is a transaction that has unique aspects to it. And I think it's just critical. But I think the most important thing that a dentist needs to understand too is they have a unique ability in their space and business. They need to understand what's going on. They can't just delegate it. And that's same with staff members if they have an office manager or whatever it may be. They need to understand what they do, but they don't need to manage it entirely. There are people that can help them, advisors that can help them, that can take that off of their plate because their unique ability is taking care of the patient, chairside manner. But they can't just only do that. They need to be aware of what's going on. They can't just go down that path and ignore everything else because then the practice will run you versus you running the practice.
Just trying to be as good of a resource for the viewership today. So I guess on my experience, there's several things that kill a deal, whether it's a startup, whether it's a transaction. I think emotions are one of them, and a lot of times that can be on the sell side. Confusion of what am I buying or what do I have, right, is the second thing. Brother-in-laws or sister-in-laws that are maybe a professional that doesn't have the dental experience sometimes can muddy the waters a bit. So what would you add to that list?
Transparency. I think it's critical, and I think that is our job at DDSmatch. Our professionals are there to bring transparency to what they are buying because it doesn't do us any good if they buy something that isn't right for them and they fail. I mean, that reflects on us. It reflects on the banks that we work with. So our job is to bring as much transparency as possible. That's part of our process. If it's, business valuations in the process, if it's clinical opportunity, if it's all the clinical things that the buyer needs, we want the buyer to have a good team. We represent sellers only. We don't represent both sides. We want the buyer to have a good team that does the due diligence because we want them to be confident on the path. That's what gets it to a transition, not just a transaction.
And I'll add to that too, is that I've had doctors, and I'm sure you have as well, is come and say, why does that matter? Why do I have to have dental specific? Why can't I use my relative that is an accountant or an attorney? Or even when I was on the other side of the business, when we were starting practices, that why can't I use a contractor? And it's a very simple answer. It's efficiency. And that efficiency means dollars in your pocket as an owner. So to give an example towards a transition, if a transition is delayed by 30 days, and that particular practice you were going to buy is after debt, payment is going to make you $300,000 a year, $25,000 a month, and it's delayed by 30, 45, 60 days because of maybe somebody in the process that doesn't understand it, isn't efficient. Well, that's $25,000 to $50,000 of income to you as the owner that you're never getting back. So was the money that you saved by working with them worth the $25,000 or $50,000 that you just lost? And I think majority of the time the answer is going to be no. And again, when we talk about goodwill in these transactions, those delays, those inefficiencies, the misunderstanding of maybe those parties that are involved can really maybe sometimes erode some of that goodwill in that process. So we get that question a lot, is like, why is it so important to have those folks? And it really comes down to efficiency and how those delays become an impact to the doctor. And I'm sure you've seen situations where it's come up, it's delayed a process, and I'm saying 30 to 60 days and potentially even longer, where not having the right team around can really impact you.
Yeah.
30 to 60 days can also kill a deal because time is also a killer of deals, right?
Agreed.
And so that efficiency cannot be undersold. And again, that's just the perspective that a lot of these younger folks just need. They need that perspective of getting out of their own way, of understanding that every time they negotiate, it's emotional withdrawal. So we don't want to go back to the table 20 different times, because what are we buying in the end, or what are we starting in the end? We're building relationships. It's a very relationship-driven business, and it will always be. where dentists are in the mouths of people right in front of them.
I think another thing I want to add to that, a critical piece to be proactive and in not falling apart is a highly comprehensive letter of intent. It's a non-binding agreement in every state, but you want as much detail in that letter of intent as anything. You don't just need a price and this is when we're going to do it. You're not buying a car, you're buying a business, like I said. So taking the time, working with a professional who understands that all needs to be there, because at that point, the seller understands what's going to happen after closing, and the buyer does too. So this happens, a month or so before closing, but everything's laid out on the table. So again, we can forget about the transaction and focus on the transition. That's the key component. And a comprehensive letter of intent, which we use, is paramount to a smooth transition.
Yep, solving that confusion on a piece of paper, getting those important things on purpose on paper. Yeah. So if I were a young dentist that had been out in 3 to 4 years and I was starting to talk to my BOA rep and get educated on, am I a good candidate? If I found that right practice with DDSmatch, just tell me a little bit what would purchasing that practice look like working with DDSmatch and Bank of America?
Yeah, I think from our standpoint, when you're talking to a healthcare banker, they're going to kind of understand what your journey has looked like so far, right? Are you associating how many days a week? What type of production capabilities do you have? Do you have the reporting to back that up? So that's a little bit of a nugget there, is that as you're working through your associate position, try to get some documentation over time as far as how you can do, so you can kind of prove that production capabilities. Because when you're going to buy a practice, the banks, regardless of who you work with, are going to want to know what are your capabilities today and can you slide into the practice that you're looking at. So understanding that first as a borrower, understanding that your debt position, are you paying your bills, are you saving money, those types of things. So you're going to go through that process and have that conversation up front. And then as you start to identify the practices that you want to put an LOI out to, it's going to be gathering information. You're going to get, each of the banks will get tax returns from the practices they're looking to purchase. They're going to get your personal tax returns, an application, and get a little bit of a story about your background in the practice. And then they're going to go through an underwriting process. Across the board, I would typically say it's going to be a 10-day to 2-week, maybe shorter or longer with some. And at that point, they're going to get some approval documentation. What are the rates and terms and things like that? And then what conditions do I need to get satisfied before I can actually own the practice? And in that's going to be a letter of intent, the purchase agreements, leases, or if you're going to buy the building, getting that all taken care of. And then we're going to progress through that time frame. And as Thad said, if there's a lease involved, it's typically a 30-day process, sometimes 45 days. If there's a building involved, because appraisals are due, typically 60 days or so, maybe a few days shorter or longer. But once the process of letter of intent really gets in, most of the healthcare banks are going to start to engage with the transition consultants that are involved, the accountants and attorneys, to make sure that everybody's on the same page. And it's the seller's accountant, the buyer's accountant, to make sure that if there's anything that's needed to get the approval, that everybody has an open dialogue to make sure we get it. If there's any questions about the financials, making sure that everybody that's involved is having open dialogue so we can get those questions answered before the approval. So it's a very high-touch situation once you get into the bank with all of the parties involved. And that's why when I came back to efficiency, having that dialogue with folks that are doing it every day is immensely important.
I think this conversation has been extremely valuable today. I think that, I guess our biggest ideal here was to educate and to help just buyers ready themselves to give themselves the best opportunity. And let's be honest, it's still a competitive market for buyers, especially in those places where buyers want to live and work. So really, those that have their ducks in a row, that have become pre-qualified, have had those conversations, understand that they need some dry powder, cash in the bank account, they need some liquidity, they need to know, what's on the market, and they need to be connected with, those practices through DDSmatch. And those are the ones that get those practices in those areas. And the diligent, the ones with vision, are the ones that can identify what they want to build, and they can get through the process. And I think the biggest piece here is building that team, having a good healthcare banker, having a good broker, having a good CPA is just those ingredients to the process to make it great.
Yeah, because even though the buyer is entering the discussion with the seller about buying their practice, it's not an interview, okay? Because they're not going to become an associate. They're buying the practice. They need to come into it with that team and kind of treat it like an interview. Just because the seller can sell to whomever they like. And I've had practices that had 5 people that wanted to buy it, and it got into a bidding war, and my client picked the lowest bid because they liked that person best, and they felt like they'd spent the time building their team, because that seller has relationships with thousands of people in the community. The staff, they want to make sure that it transitions to the right person, because they're going to see that employee in the grocery store potentially. They want their legacy to carry on to the right person. So again, it's not just dollars and cents, but I think if there's one message I hope we get through is to the buyers: build a good team around you. We can help you. They can help you. It's critical. And just know that they're there for your best interest in the process, and we are too. And that's part of our role at DDSmatch, our professionals, is to ready the seller for this big transition too, emotionally, financially, whatever it may be. But I think the marriage between the two can be really great as long as everybody's prepared.
Any closing thoughts, Jeff?
No, I think I was going to ask the question to Thad, when we get a lot of buyers that come in and say, I want to go out and start talking to people about seeing what's available, how do you become the top of that list to get an opportunity to look at a practice that might be highly competitive? And I think you just answered that question, is having that team and having the rapport. It's not always about the dollar amount or the price. And I think that's very well said, because we get that question a lot as far as how do I rise up that list of 8 to 10 to 12 people that want to get the front seat of buying that particular practice. And that is something, again, that if you take something out of this, is that team aspect and getting yourself pre-qualified up front to be really prepared, not just dialing and seeing what's out there and not really doing a lot of legwork prior. Get yourself prepared before you start doing that.
The default of a startup, the default of a transaction is not professional of a small business. It's not, right? It's not. The buyer doesn't come in and say, hey, I'm pre-qualified, I've got this, unless they're coached well and they have those right people. And I would say that most of the time, those are the ones that get approved to do the startup, or those are the ones that win out, that have that emotional intelligence, that have that financial team behind them to give them the best opportunity for going forward. So great conversation, guys. So now what?
Yeah, it's a great question. I think in this series, trying to give as much education as we can, but I think for those doctors that are considering being a business owner in the next 12 to 24 to 36 months, now is the time to start building the team that we've talked about. So from our standpoint, reach out to your healthcare banker, have a conversation, sit down, get a cup of coffee, and have an open dialogue about where you're at today, where you want to go, and how your current position could positively help you today, or if there's some things to work on to get yourself prepared from a financial standpoint. In that dialogue, that banker should be the one that, if you don't have those connections, can open up their contact list and get you contacted with all of the people that we just spoke about today, and get that team built. what I would highly recommend is do the work yourself. There's a lot of our clients who will come to us and say, my friend used this person, or my professor said to use this person. Do some due diligence on your own, have some interviews, have some conversations to build the team. But I would highly recommend, if you're looking to do that the next 12 to 36 months, take the time, set up the meetings now to get that process started.
Yeah, I mean, when I started this business 15 years ago, it was a closed box. You had to connect with people to find opportunities. Now we have hundreds of opportunities on DDSmatch. So the first step would be create a profile. It's free. We never charge buyers. And they would sign a confidentiality agreement online, and then they can search and they can get data and be able to build their profile to connect where they want to be. We have DDSmatch professionals across the country. There's opportunities to connect with them. They can tell you about local professionals in their market, local bankers in their market. And that's how we start. As we say, it starts with a conversation, but really it starts there in understanding how we do this and the opportunities that are out there.
Wonderful. And just to help educate the audience, if Blue & Company has a lot of fun with dentists, and we really love to provide value on the compliance and the tax side and the financial oversight side. But our team also spends a lot of our time working across the country on transactions. And so from a business valuation perspective or from a pro forma perspective on the startup world, we really do enjoy helping those clients plan well, be ready, and be the best candidate they can be for whatever their journey is going to take. Thank you, guys. Really appreciate the conversation. I think it's been very valuable, and we'll look to do it again soon.
Great.
Thank you.
Thanks, Matt.